Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ONDAS Inc. annual report. ONDAS Inc. offers a diverse range of businesses and services that cater to various industries. The company's primary focus areas include private wireless solutions, drone technology, and automated data management. At the core of ONDAS offerings is its FullMax software-defined radio (SDR) platform, which enables secure and reliable connectivity for mission-critical applications. This platform is designed for wide-area broadband networks and supports various industries such as rail, energy, mining, agriculture, public safety, critical infrastructure, and government. In addition to private wireless solutions, ONDAS also provides drone technology through its Optimus AI-powered drone with imaging payloads. The company's Airbase base station offers a ruggedized weatherproof solution for housing, data processing, and cloud transfer. Furthermore, ONDAS' insightful secure web portal and API enable remote interaction with the system, data, and resulting analytics. ONDAS also offers counter-drone solutions through its radar system, which protects critical infrastructure, assets, and people from hostile drones. This comprehensive range of services and products positions ONDAS Inc. as a leading provider in the private wireless, drone, and automated data management sectors. ONDAS Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. ONDAS Inc. trades at a higher price-to-book ratio of 8.35 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified by examining the financial performance of 3 entities: ONDAS Networks, OAS, and Corporate. For ONDAS Networks, a decrease in revenue of $167,000 was observed from 2024 to 2025, which may be attributed to changes in market conditions or increased competition. On the other hand, OAS experienced a significant increase in revenue by 618.3% during the same period, suggesting that new business opportunities or strategic partnerships played a crucial role in driving growth. In contrast, Corporate reported an operating loss of $15,882, indicating a decline in financial performance due to increased expenses or decreased revenue. These findings highlight the importance of market conditions and competition in determining revenue growth or decline for ONDAS Networks. Meanwhile, OAS success can be attributed to its ability to capitalize on new business opportunities and strategic partnerships. The corporate entity, however, faces challenges related to increased expenses or decreased revenue, which warrants further investigation to identify areas for improvement. The net income of the company experienced a significant decline between 2024 and 2025. In 2024, the company reported a net loss of $38 million, but this figure increased by 251% in 2025 to a net loss of $133.4 million. This substantial increase in net loss can be attributed to various factors, including decreased revenue or increased expenses. On the other hand, profit margins showed an improvement in 2025 compared to 2024. The gross margin increased from 5% in 2024 to 40% in 2025 due to a more favorable mix of revenue. However, despite this increase in gross margin, The net income before income taxes decreased from a loss of $38 million in 2024 to a loss of $132,892 in 2025. This indicates that while the company's profit margins improved, its overall profitability remained low due to other factors such as increased expenses or reduced revenue. Management's outlook on company strategy. The company's management is optimistic about its future prospects, with several key initiatives underway. One notable aspect is the elimination of dividend payments for now, as the company anticipates maintaining a zero dividend yield. This suggests that the company is prioritizing reinvestment in growth opportunities over shareholder returns. In terms of strategy, management is focused on driving growth through strategic acquisitions. The recent completion of several business combinations, including the acquisition of Apero Motion Limited, Smart Precision Optics SPO Ltd., and others, demonstrates this commitment to expansion. These deals bring new technologies and expertise into the company, positioning it for long-term success. The addition of new executives to the management team as a result of these acquisitions is also a positive sign. This influx of fresh talent and experience will help drive innovation and growth within the company. Overall, management's strategy appears to be centered on leveraging strategic acquisitions to fuel expansion and increase competitiveness in the market. That concludes the financial summary for ONDAS Inc. Feel free to comment below, and I will be happy to answer them when possible.